Good morning, trade pros. Welcome to our morning market update for Thursday, May 24th of 2018. This is George Papazov from Trade Pro Academy. I just got a notification that I went live. That's cool. Wasn't aware that happened. Today, we're going to talk about a few things, including the FOMC meeting minutes, another update out of China, and we have a slew of economic data on the calendar today. All right, I'm excited to be here with you, and we're going to get started right away. All right, so last night, Target is down 5.7% on margin pressures, so that stock is traded much lower. And Lowe's is up 10% after Bill Ackman takes a $1 billion plus stake. So he bought a stake, like a juicy stake from Lowe's. No, just he bought a portion of the company for $1 billion, and that's why Lowe's is up 10% as investors get excited and purchase more as they go in with them. In terms of markets overnight, Japan's down 1.1%, Hong Kong's up 0.3 of a percentage point, China's down 0.5%, and India's up 0.9% or 1%. Average. All right, so Asian markets mixed across the board. In Europe at midday, London's down 0.1%, Paris is up 0.4%, Frankfurt flat. So for all intents and purposes, we're kind of trending sideways, a little bit lack of momentum. And in the United States, Dow and S&P are flat. Nasdaq's also mostly flat, up 0.1%. Crude oil is down big today. We're going to talk about that. And gold prices are up 0.5 percentage point. Bitcoin down another 2.5%, trading 7,318 now. All right, 10-year Treasury yield is now flat at 3%, no gains. However, it's still at the key 3% benchmark that many institutional bond investors fear. They say anything above 3% raises short-term borrowing costs to the degree that it will have a negative impact on the economy. So they're still concerned on that. This morning at 8:30, we had initial jobless claims. They came out at 234,000 versus 220,000 expected. So a higher number on initial jobless claims actually means that it's done worse, means more people have filed for unemployment in the United States in the past week. Continuing claims are also in line with expectations. These ones are 1.74 versus 1.75. But the 4-week average of initial jobless claims went from 213.25 to 219.75. So the 4-week average has increased up, and that's not a good sign for the labor market. All right, 9:45, you got the Bloomberg Consumer Comfort Index. 10 a.m., we have existing home sales. 10:30, we have natural gas inventories. 10:35, Fed's Bostic is speaking. 11, Kansas City Fed manufacturing survey. So you guys can see we got a lot of economic data today. 1 p.m., 30 billion 7-year note auction out of the United States. 2 p.m., Fed's Harker speaks. 4:30 p.m., money supply and balance sheet out of the Federal Reserve. A ton of economic data today, and we're starting off on a little bit of a negative note, so we're slightly more bearish from the economic data front. And the big report comes at 10 a.m. existing home sales and 10:30 natural gas inventory. We will trade natural gas inventory in our live group. It's not the best opportunity. The oil inventory report yesterday was far better, and we traded that beast mode. We did really good yesterday on oil. We spotted the opportunity. We're patient, and we got in at the right time to catch a 40+ cent drop on oil prices. And that drop continues today. So a few quick updates before we get into the main thing of the day, which is the Federal Reserve. North Korea's leader, not Kim Jong-un, his senior envoy for American affairs, has renewed a threat and threatened to call off a summit that Donald Trump and North Korea, Kim Jong-un's North Korea, is expected to have June 12th. He said that Pyongyang could make the U.S. taste an appalling tragedy it has neither experienced nor ever imagined. We're back to that kind of talk. This is like two kids in the schoolyard. They just push each other, put on a show. The kids start watching. You know, they huff and puff, and they puff up their chest, and then they look at the girl they're trying to impress, both of them, and then they don't end up fighting. But then later on in class, like, wait till I see you next recess. It's getting a little, honestly, it's getting a little stupid. I'm sorry, I couldn't find a better word. It's not really, something's got to happen. They either have to meet or they just have to agree to disagree and not really go at each other like that. It's not a productive way to have discussion. All right, but he said a nuclear-to-nuclear showdown should be avoided, and he called Mike Pence a political dummy for comparing Libya's denuclearization to North Korea. So these things are starting to heat up once again. The market's not liking that. The market's being very reactive these days. A slightest little tilt from sentiment one way or another ends up causing a big move up or down. And you have to understand, when you're going into summer volatility, which means there isn't a lot of traders, there aren't a lot of volumes as there used to be. A little announcement is all that we need to actually take out some stops to the upside. So we're trading here. We take out the stops. We rally on some news, come back down because there's no more interest. Now we accumulate some longs, take out the stops again, come back down. So there's just a stop machine in the making, and we're at a key resistance on the S&P, and that's also putting some sell side or supply side pressure on these markets. Let's talk about the Federal Reserve. The Fed yesterday released their meeting minutes for the previous meeting that they had. All right, and when you release meeting minutes, it's a delayed read, right? They already had this meeting. You're just reading the minutes of what happened. The public finally has a chance to see what happened. And they did say a few things that were very interesting. Number one, 3 rate hikes are expected for 2018. They're not letting off of their bias for 3 rate hikes. What does that mean? June, you could expect the rate hike. Mid-June's meeting, rate hike is pretty much priced in at this point. September, rate hike. December, rate hike. So every single meeting from now to the end of the year, there's a rate hike baked into it already. And the market sort of didn't like that, but it's already priced in. That's something that was already priced in from pretty much January 1st, 3 rate hikes this year. All right. So what else do they say? Here's where it gets interesting. It said that they may not be as aggressive with rate hikes as some had thought. And that's kind of the sentiment, it's kind of the read. So because they're saying, look, we're going to have 3 hikes, but we're not going to get as aggressive in 19, maybe 20 as well. We won't do as many rate hikes. We're going to slow down. We're going to do what we planned, but then we're going to slow down after that and reevaluate. That sort of non-rate hike sentiment is putting some bullish pressure on equities, or put some bullish pressure. That's why they recovered and shot up last night or yesterday in the afternoon. All right. But if you think about it, what does that really say? Yeah, fine. You're not going to raise rates, so borrowing costs aren't going to go up. Therefore, stocks could profit from this, and they're going to have higher margins, blah, blah, blah. Borrowing costs are going to stay steady. It's a nice knee-jerk reaction higher. However, when you think about the real deep meaning, they're saying they don't believe or have the confidence that the economy or the market structure itself could sustain more than 3 rate hikes, more drastic rate hike cycles. So they're actually saying, this economy is not as great as it looked when we started raising rates. And why is that? The jobs numbers have turned over a little bit recently. Inflation has really slowed down recently as well. So those are 2 things they look at. Here's another thing the Fed said that was the primary driver of the upside in equity markets. Came down to 1 sentence, and I'm going to read it from their statement. All right. They said that most modest inflation overshoot, brackets, could be helpful. And what does that mean? That means they're going to allow inflation to run over their target temporarily. Not only are they going to allow it to happen, the Fed is now saying it could actually be helpful. All right. Do you guys know what that means? That means they're going to allow inflation or prices to continue to go up, go up. And what are they going to do? They're not going to stimulate. They're not going to put money in the economy. They're not going to raise rates. They're going to look at it and say, wow, this is helpful. It's above our target. We're supposed to act, but we're not. We're going to sit back and smile at this. That is what drove the sentiment of the bullish equities, because the market said, if that's true, you ain't raising rates, I'm going to buy equities, and equities kind of rallied higher. All right. Surprisingly, gold also took off. Not surprisingly, the US dollar got hit quite a bit. And surprisingly, oil dropped a significant amount. But oil was in a topping pattern to begin with. It topped out. It needed to come back down a little bit. So we're getting a little bit of a reset in the oil price. So today in equity prices, honestly, after the FOMC meeting, after yesterday's oil inventory news, this Thursday and Friday could be slower. Last week was options expiry. In a few weeks coming up, we have the big Fed meeting about the rate hike mid-June. So I think markets could slow down today. I think there could be a little bit of absence of volume, absence of volatility. But I'll tell you this, I got a feel, an intuitive feel in here, the heart-body or the heart-mind connection, that we're going to see a little bit of selling in today's session. I got a feeling that we were low going into the Fed. The Fed announcement wiped the buy stops. Now the sellers are coming back down. And that's how we're going to trade it to start. And if we're wrong, we're going to flip and go to the long side. All right. You could be long, you could be short, you could be wrong, but don't be wrong for long. All right? That's a TradePro quotable right there. You guys take care of yourselves. A great day. Manage your risk. Got to turn around, open up a trading room, do some levels, do some trading, and I'll see you guys tomorrow morning at 9 a.m. Have a safe Thursday. Enjoy your trading day. Manage your risk and trade like a TradePro. All right, guys, that's all I got for you today. Please comment, like this video if you liked it. Share it with your friends and family. Just help us get the word out. Help us get the word out about you and the community and family you belong to. We don't need to keep this stuff a secret. The more people that we help with this information, the better for us. The more volatility we'll create. All right. So I appreciate you guys. Thanks for tuning in every morning. I'll see you tomorrow morning at 9 a.m. Have an awesome day. And remember, there's a lot of news. Tread carefully. Adios. Whee. Chair spin. Okay, trade pros in the room. Any questions about what we said on the federal meeting minutes? I can give you a little bit more depth to the meeting once we conclude the YouTube update. I'll give you a little bit more analysis on what they said. We have the full report here and the full statement. There was a lot of changes on this statement, actually. Some language, some terminology change, but that was the big news, the inflation overshoot, and also the fact that because of that, interest rate hawkish cycles look like they're slowing down temporarily, at least for now. So see you later, YouTube.